Now, some interesting moves they made here in terms of they didn't add or subtract, right? Apple and Bank of America, both of those stocks, they seem to not really make any move in regards to that, which shows Buffett's belief in Apple that this is just a business that he just really just wants to hold long term. He doesn't want to make any rash judgments in regards to Apple up or down, right? American Express, Coca-Cola, those ones don't come as any surprise to me in terms of, kind of holding steady there. I would be really surprised if he didn't make any big moves in regards to American Express or Coca-Cola. Same thing with Kraft Heinz, Moody's. Now, two stocks specifically he didn't add to, and I'm extremely surprised because I really thought they would have added to these two stocks specifically, are these two stocks. One is Amazon stock. They didn't really do anything there. They established a stake in Q1 of 2019 at between $75 and $91, right? And then they increased by 11% the next quarter between 85 and 98. I'm very surprised that in Q1 they didn't add to Amazon, and Q2 they didn't add to Amazon. I really think they should have. I just think Buffett has trouble getting over the PE ratio of Amazon and the fact that you have to pay up for a stock like this that has the sort of growth this company has and has the sort of potential this does long term, right? And the other one I'm even more surprised he hasn't added to this one considerably is Ally Financial. Now, it could be because they already are a big owner of Ally. Maybe that has something to do with it, right? But when I think about Ally, it seems like this should be the perfect time for Buffett to add to the stake considerably more because Ally is perfectly positioned. The great thing with Ally Bank is anytime interest rates are in an elevated place, savings accounts start yielding really high for Ally. And so Ally is able to attract a lot of deposits, a lot of money to Ally Bank because Ally Banks is one of the most famous savings account companies and CD account companies. Like if you're in a higher interest rate environment, you go to Ally Bank. It's known for that, right? SoFi is starting to make a name in that space as well, which is good for any SoFi shareholders that are watching this. But Ally's always been that player. So people move money out of a Bank of America, a JP Morgan, a Wells Fargo, places like the big traditional banks that they might do their checking accounts with, and they move that money over to Ally to get to the savings account rates because you're not going to get crap from those big traditional banks in regards to great savings rates. Ally, you can get 4 to 5% on savings accounts, CD accounts. I think they're even offering like it's either them or SoFi is offering 4.55 on a no penalty CD. So meaning essentially you could even pull the money out before you're supposed to pull the money out. Like let's say it's a 9-month CD or something like that. Like that's pretty fascinating that you can do that, right? And so, but like I said, it could be something in regards to, them already having, maybe they don't want to go over 10% ownership. That's my guess in regards to that. Ally Bank, by the way, I don't personally own it, but if you told me I had to buy a financial outside of JP Morgan, I might actually be inclined to buy Ally, to be honest. Then after that, maybe a Goldman Sachs, and maybe after that, maybe somebody like a SoFi or something like that, okay? Let's talk about $30, right? Which was about 50% downside from here, and how realistic that is, okay? So I will say this, everything's a possibility in the stock market. Everything. There's no such thing as not a possibility in the stock market. And that's something you have to understand as an investor. Now, the question is, how realistic is something to actually happening, right? How realistic is it that a certain situation could happen? I live in Vegas. This is a town of odds, and we put odds on everything, right? And this team is favored over this team and all those sorts of things. So I would say the chances PayPal, and I'll go through my reasoning in just a moment, the chances PayPal goes to $30, I would call it less than a 10% probability, probably closer to a 5% probability, which is not very probable. There's a 95% chance, in my opinion, this stock doesn't go to $30 a share. But it is a possibility, okay? So very, very low probability in regards to this one. And why do I say that, okay? There's a few reasons. So first is, in regards to this, right? If we look at the current, P's of this stock, right? If you were to talk about this stock going to $30, then you're talking about forward P's of 5 or 6. It doesn't make any sense. Let's say you had some sort of major recession that happens, something like that, okay? Well, then you could say, well, maybe profitability would get hurt. I can make an argument that PayPal will grow even in a recessionary environment, unless it's some end of the world type recession, okay? But let's say their profits did go down as a recession happening, okay? Well, if you were to talk about a recessionary environment, let's say their profitability got cut in half, which would be like end of the world type recession. So then the stock's trading at a forward P of 22 in a end of the world type recession. That's really low. If you're in an end of the world, type recession, and you're trading at a forward P of like 20-ish, it's really low because then everybody's looking and they're saying like PayPal's like obviously going to have much better days than what they're having today, right? So from that standpoint, I look out there and I say that's an extremely low probability you could fall to $30 even if the market got hit really, really hard, okay? Now, the way I look at PayPal stock, and then we'll kind of talk about what my plans are here. Am I buying long-term call options and things like that? PayPal stock, in my opinion, is in a bottoming out phase right now. A bottoming out phase is essentially a phase a stock goes through where, you know, it's basically already churned through most of the old shareholder base, and most of those folks sold out, and it's gathering a new shareholder base. And if you kind of take a peek at PayPal stock over the last like year or so, it's basically what it's doing. It's just finishing out the churning of these old investors and gathering new folks like myself, right? I was never a PayPal shareholder. Now I am a PayPal shareholder, right? And I want to become a very, very large PayPal shareholder. So it's moving out from the folks that used to own PayPal stock here, and it's selling these shares off to people like myself, right? And so we have that situation going on in the stock at the given moment, right? And so this is a bottoming out phase that's going on in my personal opinion. And these phases can last anywhere from like 1 to 3 years, depending upon how long we're really talking here, right? Now, in regards to myself, my plans are to continue to add shares pretty much on a week in and week out basis, as long as the stock is anywhere under $100 a share. Anything under $100 a share, I am a buyer of. And so don't be surprised if eventually this position's $200,000, $250,000, something like that, okay? Now, the next thing I'm also looking at, especially if the stock is under 60, is I actually am considering some like long-term call options, some things that expire in 2026, January 2026. I bought a few so far, not very much. Because the way I like to think about this, okay? Let's say I was going to put $100,000 into PayPal stock, right? What I could end up doing is instead of just buying $100,000 worth of the shares, I can go ahead and I can buy, let's say, $90,000 worth of shares over the next 6 months, and then I can buy $10,000 worth of long-term call options, right, that expire in 2026. This is something I regret not doing with Meta. Meta, I was just buying shares. I should have bought some leaps, because those leaps would have been up, depending upon strike price, probably between 3 times and 7 times their money right now, okay? So I should have been allocating 10% or so of my money, especially in Q4 of last year. That was ridiculous. And so I'm not going to make that mistake twice. And so likely I'll be a buyer of at least some sort of leaps. You just got to watch yourself in terms of your risk levels in regards to these long-term call options. Because what if PayPal stock is stagnant for the next several years, right? And your leaps all expire worthless. That's where, you know, you get into some trickiness, and that's why I can only allocate a certain smaller portion over to the leaps versus like just buying the stock straight up. Okay, so yeah, that's my opinion in regards to PayPal to $30 and that whole subject. Okay,